Welcome back to Daily Finance News, your reliable source for the latest updates and insights from the world of finance. I'm your host, and in today's episode, we'll be discussing the mixed performance of Wall Street as investors eagerly await developments in the ongoing debt ceiling talks. With uncertainty surrounding the outcome of these negotiations, let's dive into the details and explore the implications for the financial markets. Our top story today revolves around the recent performance of Wall Street. Can you provide us with some context? Absolutely. Wall Street recently closed with mixed results as investors closely monitor the progress of debt ceiling talks in the United States. The debt ceiling is a legal limit set by Congress on the amount of debt the U.S. government can accumulate. Failure to raise the debt ceiling can have significant consequences, including a potential default on U.S. government obligations. What factors are contributing to the mixed sentiment among investors? The uncertainty surrounding the debt ceiling talks is the primary driver of market sentiment. Investors are keen to see progress in these negotiations to avoid any potential disruptions or economic instability. Additionally, concerns about inflation, interest rates, and the pace of economic recovery are also influencing investor sentiment. How did the various segments of the market react to this mixed sentiment? The market reaction has been somewhat divided. While the tech-heavy Nasdaq index experienced gains due to investors seeking refuge in technology stocks, other indices such as the S&P 500 and Dow Jones Industrial Average witnessed more modest performance. This divergence in performance reflects the cautious sentiment prevailing in the market. Are there any specific sectors that are particularly sensitive to the outcome of the debt ceiling talks? Certain sectors, such as financials and utilities, tend to be more sensitive to the outcome of debt ceiling negotiations. Financial institutions may face challenges if the talks fail to result in a resolution, potentially impacting borrowing costs and credit markets. Additionally, utilities, which often carry significant amounts of debt, may experience increased volatility if the debt ceiling issue remains unresolved. Given the uncertainty surrounding the debt ceiling talks, what strategies can investors consider adopting? In times of uncertainty, investors often lean towards diversification and risk management strategies. It's crucial to have a well-balanced portfolio that includes a mix of asset classes and sectors. This diversification helps mitigate risk and provides exposure to various market segments. Additionally, staying informed and closely monitoring the progress of the debt ceiling talks can help investors make well-informed decisions. How do these debt ceiling talks impact the broader economy? The outcome of the debt ceiling talks can have significant implications for the economy. A failure to raise the debt ceiling can potentially lead to a default on government obligations, which would have far-reaching consequences. It could result in higher borrowing costs, reduced investor confidence, and increased volatility in financial markets. The uncertainty surrounding the talks can also affect consumer and business sentiment, potentially impacting spending and investment decisions. As we conclude today's episode, it's evident that the ongoing debt ceiling talks are keeping investors on edge, leading to mixed performance on Wall Street. With the potential risks and implications involved, investors should remain cautious, diversify their portfolios, and stay informed about the progress of these negotiations. We'll closely monitor any developments in the debt ceiling talks and provide you with timely updates. Thank you for sharing your valuable insights on this topic. That wraps up today's edition of Daily Finance News. We hope you found our analysis of Wall Street's mixed performance and the impact of debt ceiling talks informative. Stay tuned for our next episode, where we'll bring you more intriguing stories and market updates from the world of finance. Until then, take care and stay informed.